How's it going, everyone? Today we're going to be doing a market recap as well as a weekly watch list for the week beginning February 9th, 2026. Let's begin. So here we have SPX still in this massive, what is equivalent, basically a 6 month range dating back to like September. Um, we had this massive 3 day drop. I say massive, it really wasn't that big, but in terms of the price action for non indices and everything, and especially for higher beta indices like NASDAQ and IWM, the move was much bigger. But we had this big 3 day drop. Everyone was panicking the fuck out of their minds, losing their minds and everything. Ended up just recovering 2 days worth of a crash in a single day on Friday as shorts were being unwound. So pretty massive moves going into last week. We're gonna have a lot of volatility this week as well, I believe, but it will be subdued. I believe we'll be getting some relatively decent volatility, and then it'll really pick up again once Nvidia earnings are out of the way and once February OPEX is done. But do not, at least for me, I don't expect a lot of volatility like the last week to happen this one. So jumping into it on the smaller time frame, you can see we have this clear little SR area over here going back from to the former all-time highs set in October. You can see it acts as resistance here, here, breakthrough over here, resistance here again, here briefly. Then it acts as support as we're trying to grind back into higher highs, excuse me. Found it as support here again, and then now we've just kind of been chopping around it, breaking up and down, taking out market structure levels like these lows over here on the Friday session, or Thursday session rather. So very, very messy price action. This is kind of characteristics of a distribution. Now, with a lot of stuff, like if you're in the crypto world, you're already in a deep bear market. Indices and equities are a little different and very varied depending on what you're in. If you're in a lot of small caps, then you're probably not having that great a time depending on what you're in. If you're in software, cooked. If you're in tech, depending on what you're in, cooked. You know what I mean? So you have to be really selective. I was saying that going into this year, selectivity is going to be a much bigger factor. The bull run up until now, the last several years, almost everything has gone up a ton if you were just invested in basically tech or AI trade as a whole. Now you got to be a little more selective, and we're starting to see that. So where do I think SPX is going to go? Well, based off the chart so far and everything, and the strength on Friday, I would not be surprised if we grind up in this upper area over here. So from this SR area at 69.12 all the way up to all-time highs at 7,002. Potentially even putting in a new all-time high. I'm still anticipating that Q1 drop, so that has not changed. I have another month and a half basically to get that right. We'll see how it goes, but I think there's going to be a pretty decent 10% drop on indices within the next 2 months or so. That's still in the plays. How I can see that panning out is something like this. So we go in, set a new high over here. This will be Feb OPEX. Around here, right? I believe that was on the 20th. Maybe a new high, and then start to really get lower and lower. Get below this critical area where we've been bouncing off of twice now over here. Retest, and then really start to go lower. Go for these lows over here, and then just break down structure nice and smoothly. If this were to play out, it would be very similar to the market maker sell model, which is something that occurred on Bitcoin. So if you look at Bitcoin over here, you can see the market maker sell model is pretty clear. So we have couple of different things. You have to have a long-standing uptrend. We have that. We have the uptrend break, and then you have this series of distributions and imbalances. So balances, imbalances forming until you have a peak and then a resolution, which basically just leads to the crash. So we have balance 1 over here after setting in. This would technically be balance 1, November 22 lows, chopped around here for several weeks. Then over here, balance 2-ish, this whole area really. Then up here, 3, 4, 5, you get a very clear range. You have a swing failure pattern at the top of it, and then breakdown on the EMAs, breakdown of the level, a retest, and then breakdown. What will happen on Bitcoin is probably going to be similar, where you'll have this range kind of formed over here. Price will chop around for a while and then go lower for that final breakdown with a target from 38,000 to 48,000-ish. So you can see over here, the critical thing to be looking out for is a range formed at the top with 3 to 4 bases, followed by a swing failure pattern above it, and then a slow grind lower. Once you get this confirmation of a move below with a candlestick close below it on the high time frames, that's when you know the pattern is probably going to be playing out. And here is that market maker sell model. So you have original consolidation, you have a phase of accumulation, and then another phase of accumulation over here with that swing failure pattern, and then we break down, and the rest is history basically, right? So you get 2 to 3 distributions. Sometimes it's more, often in this case it's 4 to 5, and then the balances and imbalances on the way up and down. So continuing on with a watch list, we have NVIDIA over here. Some things to keep in mind are that February 25th, we're going to have earnings coming up. That's going to be at the nighttime. Obviously, Feb OPEX is also prior to that. NVIDIA has been holding up this support level yet again. So we had a sweep below it, which is making me more inclined for a move all the way up to 195.5, maybe even a sweep above this level before breaking down finally. But NVIDIA looks good for a long candidate going into its earnings. Would not be surprised at all if it breaks 195, so it's definitely up there on the watch list. It also closed above the 921 EMAs over here, so yet again, like, just because we get that break above does not necessarily mean that we're going to be trending up, because as you can see, we have had a lot of breaks above here, but then it just resulted in chop. Why? Because we're in a huge distribution up here, right? Some might even say it's a head and shoulders. If you extend this out, you can see shoulder, head, shoulder, right? With this being the neckline, and a breakdown from here would give you a targeted move towards 143.5. However, going into both the earnings and with all the capex results that have been coming out of the Mag 7 companies, with a projected capex of $680 to $810 billion spent, or that will be spent this year alone, and a large chunk of it going to NVIDIA, and also having this huge sell-off going on for several days, I can see a short squeeze happening, just like on Friday, some continuation after the chop, and we can push above 195.74. So just be on the lookout for any chop. Look for any sort of distribution that happens on the smaller time frames, and then try to enter after the breakout on that with a target towards 195.5. Next chart is going to be Dell. So Dell, again, also has earnings coming up later in February. These are all swing trade candidates, by the way, guys. I'm not going to give watch list on like 0 DTEs, because that doesn't make sense. You know, price will just move too wildly by the time you get to it. So anyways, uh, clear downtrend over here, has been trying to break out several times. Finally got a breakout, a retest, and then now we're gonna look for a move higher. The target on this breakout would be 142 high over here. However, let's not get that greedy. You should have some sort of continual profit taking strategy. So taking profit at TP1, TP2, TP3, and then this will be your final TP. However many TPs you have, you want to be taking profit as time goes on in the trade. So the goal will be to go for a trade all the way up here to the fib levels. So TP1 would be 126.28, TP2 at the 0.618, which is 130.07. You can just make it 130 clean. Then TP3 over here at the 0.68 or 786, and then the final TP at 142. But Dell looks really good over here. We have most of the work done, so almost all the chop really, really strong going into that dump. I mean, it still formed higher highs and higher lows as the rest of the market was bleeding badly, just because it put in most of that hard work. As I said, the chop and grind down, it put it in before the rest of the market did. So it's a leader right now, so we can also expect a move to the upside coming. If we're net bullish on the market, then we can expect some of the market leaders that were falling previously to also be stronger going into this new run up. So Dell is a really good candidate. Next up here would be Cisco. So Cisco is at fresh all-time highs. It's the first time it's hit this level ever. Was still below its former 2000 .com bubble all-time high until recently, and now it's just been on a rally. Over here, basically my thoughts on Cisco are we have a breakout of some pretty clear resistance, so we can put it like that, right? I want to look for a break and retest on this. Very simple. So enter around 83.89-ish, anywhere in this area really. And then with a move projected higher, our TPs will be the fibs. Whoops, so I gotta go a little higher here. Perfect. TPs will be the fibs, so 85.16 will be the first major one, and then final main TP is 86.34. If this fails to hold up here and ends up breaking down, then it will be a swing failure pattern. I think that's less likely because we got a candlestick close above here, but that's just my thoughts on it. We have earnings coming up as well on the 11th, so it is probably going to have an earnings run up going into that, which makes a pretty good candidate on the swing watch list. You have 2 days of run up basically, and a really nice formation going into all-time highs. Looks very solid. Now Intel over here. So Intel had this huge gap down and continued move down after earnings, came back into this long-standing downtrend resistance, right? Found support over here by the 9 EMA, 9 week EMA, as well as that support level again. And now it's looking to get even higher. So this chart, incredibly fucking bullish, has been forming higher highs and higher lows going into the downtrend for the rest of the market. The move I'm looking for is just a gap fill up here. So targeting 53.11, currently at 49.81. If I could enter, it would probably be at 49.5, this level over here. If I could get a pullback and then go long going into that level, that would be ideal. So something like this with a stop loss below the previous day low. So yeah, Intel looks really good over here as well. Just trying to look for leaders with some sort of strength in them. You know what I mean? So market was previously really weak. That showed a lot of character about the different assets, so pick the stuff that's really strong. If it was strong into the downtrend, it's going to be even stronger going into the uptrend. Next is Oklo. So Oklo was not strong. This is a bit of a different play, but more so a mean reversion play. So Oklo over here had this breakdown of this long-standing uptrend, retested it roughly, broke back down over here again. I'm looking at it in terms of like this. So it's forming, has the potential really to form a bull div over here, swept this low that it has been trying to breach since going back to September over here. So tried in November, December, December again, and finally took out these lows. Volume was pretty decent and is showing higher as price is moving higher. I think Oklo could have a nice little mean reversion play up here, going back into 85.5. It's not my favorite setup though going into this, so that's why I'm not too enthusiastic about it. But can't lie, in terms of the potential, after you see a big drop like this, like what is that? That is 46%. You know, just just do the math, or not really any math to do over here, but use your head. Like a stock goes through a 46% move down in what is that? A month. You're probably bound to have some violent moves to the upside just because the move was overdone. Let's go into it now. Lunar over here, also a really strong candidate, has been pretty strong overall in this run up. Obviously did not protect it during this downtrend over here where it lost a huge significant chunk of its value. Yep, also a 37% move down. Very brutal for lunar bulls, myself included, but I've been riding in this uptrend the whole time, so gotta take it. But lunar, same sort of deal. I'm seeing resistance over here with that floor, broke down over here, which gave that massive 2-day move down. I want to see a breakthrough above here and then to aim for these highs up here at 23.28, potentially even 24.92. It does have earnings going into March, so while it is still early, if you're getting some swings going into March, you could see a nice little earnings run up. Besides that, also, Lunar has a contract with NASA that is to be announced within the next 2 weeks, apparently. Rather, they are in a competition to get that NASA contract, so that's something to look out for. If that were to ever be announced during those 2 weeks that they won, then the stock is going to have a massive day, up at least bare minimum 20%, because the value of the contract is worth more revenue than they currently make. So it could easily, like in terms of real value, it should double the stock. That would happen over time. Obviously, it takes a while for price discovery to occur. It doesn't just happen like in a single day, but for a single day move, you can expect like something like 20%, and I'm not even trying to like gas that up. Just look at this chart. It happens all the time whenever they have huge announcements, like going into this one, for example. This was a 58% gap up. I was here on this. It was beautiful. So yeah, 58% gap up off of another different NASA contract that they got. If Lunar were to get this one, it would be its biggest yet and massively gap the stock up. So that's the main thing I'm looking for, really. All right, going into another distressed asset, we have SoFi. So SoFi has swept these lows over here that started really forming this. I don't want to say it's a distribution because it's still an uptrend, but you can kind of see how the characteristics of the chart are very different from this moment onward compared to like going down here, right? So it got much more horizontal, much more, chilled out and everything in the move, and then really started forming this very clear distribution. So broke down from here. What I'm going to be looking for is just a move back up to here, $25. Multi-week move, most likely. Maybe even a single week, depending on how volatile we get this one. But SoFi is just going to be a mean reversion play, effectively. with how little liquidity there is set up over here, excuse me, I can expect the move to happen really quick, to be quite honest. In terms of market structure, there is very little over here, so that's why I'm saying, excuse me, I'm going to be looking for anything that was set up during this downtrend, which would mean, for example, this level right here. Wow. Okay. This level right here. So $23. As you can see, we had a huge amount of support and resistance over here. When it failed, the breakdown happened much more aggressively. Now it makes sense for it to move back up into here. A final TP would of course be at $25 over here, but this is where the original breakdown occurred. I'm gonna give that maybe 1 to 2 weeks, 3 weeks maximum. But again, when I suggest swings and stuff like that, you should always also take a lot more time to for your contracts to play out. So buying the time, it's expensive, but always worth it. All right, we have Lemonade over here. So Lemonade, another big breakdown. Looked like it wanted to grind up higher after having this big distribution over here. It looked like a triangle formation. What is the term called? Like a pennant. Doesn't fucking matter, right? We have a support resistance level. We have an uptrend. That's all we give a fuck about. So support resistance level, swing failure pattern, came back into it. Another swing failure pattern over here. Broke down, massive sell-off. Again, same thing going into this one. I'm looking for an earnings play run-up, moving back into this SR level at $84, currently at $74, so that's a $10 move. EMAs are also right up here, so it makes sense for them to catch up. I'm not particularly bullish about the stock because, again, this is a bearish formation, but again, we don't need to necessarily just play the downside, so we can play the stock going back up into this area, catches up with the EMAs, rejects, and then goes lower. Yeah, that's my Lemonade play basically. Also note where it found support around this area where the distribution kind of began. So it did not sweep any major levels besides this. However, that's also makes me more inclined to see a move to the upside because it's not going to sweep out all these levels. If it swept out every single level, then that's a complete flush. Like, you should expect the stock to just roar back up completely or be in a huge distribution for a long time until it finally settles down and then continue its next run up. But again, I don't think this is the crash yet. The bear market is yet to come, so that means that we're going to have still some dead cat bounces, some moves up before we continue to grind down slower in a more mechanical manner. And so it makes sense that we swept this low. I'm expecting the next move to be to the upside, getting back into this SR area, potentially sweeping it a little bit, and then continuing lower with earnings run up as another confluence. And then another chart, Bank of America. So had this huge gap down after earnings, consolidated. This is kind of what I mean by, you have a breakdown consolidation before ripping back up higher. So massive uptrend going back from the Liberation Day lows, forming what is a bit of a cup and handle. So let me show you. Not 100% confirmed yet as a cup and handle, but basically we had this level right here, clear distribution. Okay, very clear support resistance level with this bit of a distribution. We had a breakout, swing failure pattern, break back down, try to tap it again, bearish retest, fail back lower, and then we had this huge drop, massive distribution, and then the stock is climbing back higher, and look where we are now, above it. So this is one of those candidates where I'm more confident entering sooner than later because it's just at that key level right now. So at the key level with the 9 and 21 EMAs on the 1 hour, on the 4 hour, it's not very extended either, as you can see over here. So I would not be surprised if we get a move down back to the 4 hour EMA and then continue higher. The main thing I want to be looking out for is a strong break above this. So if I can get a big green Diddy candle over here, then with some nice volume, and that's going to confirm the upside for me. Also had some very good volume accumulation patterns, or breakout patterns rather. You see over here, high volume on this breakout candle right here. Another high volume candle on this attempted breakout over here. Then found support at the 9 EMA once again. So BAC looks very good. Banking in general is super strong right now. Fintech, not so much, but banking, traditional banking is really strong right now. Okay, next we have Altria. So the move to distressed assets was happening as tech, SaaS, and a bunch of different things, to be quite frank, took a beating. So more distressed asset classes like dividend funds, high dividend stocks like Altria over here. You have the Charles Schwab dividend index. It outperformed SPX hard and made up for the huge gap that it's had in the 2025 performance. So they're moving up really nicely, and their charts are just looking incredible too. So anytime I mentioned this to one of my members recently, but anytime I see this sort of formation where price is kind of straggling and really like hugging that EMA while still forming higher highs and higher lows, I'm bullish like 99% of the time, because almost always I see when there is sort of a distribution happening at the EMAs, it kind of just results in a squeeze in the continuation side. So meaning, like, for example, look right here, right? You had higher highs, higher lows forming, still a lot of chop. Keep in mind this is the 4 hour chart, so each of these candles are 4 hours of time, but you can see a lot of chop happening, bit of a distribution over here, but once it breaks out, it's just trend continuation, and it gets even more aggressive for that matter. So I really like when I see stuff like that on charts, and Altria right now is entering the same sort of phase. So you can see over here, for example, broke down from this critical level, but still maintained these EMAs for the most part. Continue higher. Earnings, we discount earnings almost always because it's a huge volatility event. So the price action there is hugely discounted, at least in my opinion it should be. And obviously, and for this chart at least, I'm correct because price came back up. Hindsight bias, whatever. But yeah, so Altria is looking very, very good. I do like the push to distressed assets. I'm going to have one more of these charts to give you in the distressed asset class after this one. But yeah, I'm really liking Altria. A move towards up here, 66.62 is my main target. And then another final move towards this high. Let me get that, 68.59. Another really nice thing about Altria is the options are incredibly cheap. So this was one of my favorite charts to play when I'm doing like small accounts, or when I first started and I had like a tiny amount of money, and I just wanted to play something, or maybe because most of the time I'm trading on a cash account. So when I had sub 25k on a cash account, I had like 100 $200 left over. I can't afford any decent swings on big names like Nvidia or Microsoft or whatever, but I could afford 10 contracts of Altria swings that were like barely out the money, and the IV was low, so it was cheap. And once that move came, the volatility spiked. So it's really one of my favorite oldies but goldies charts. And yeah, right now it's looking really good. So move towards 66.6 and then 68.64. Going into the next one, we have Kraft Heinz. Kraft Heinz. Whoops. So let's go into the 1 week and let me show you the potential here. So I need to adjust this for dividends. Okay. And all right, so Kraft Heinz, very clean breakout. Earnings on the 11th, unfortunately, still can use that to our advantage. The contracts will be a little more expensive, but Kraft Heinz is a staple name with low IV, just like Altria, has a high dividend, so normally the moves are not that high. However, volatility has been really good on it. There's a very distressed name. I mean, just look at the downtrend over here. There's talks of Kraft Heinz splitting up its business to become more profitable. All of that is really, really bullish. There has also been a lot of really good bull tape on the options flow. So I think for a long-term swing, this is really, really nice. Going into right here, if you zoom in, you can see what is a clear distribution. You can call it inverse head and shoulders. You can call it a bull flag, whatever, right? Price is consolidating over here after this big move up. It's still holding its highs and lows, and it just broke out of a massive downtrend over here with huge bullish characteristics. Like, look at all these volume patterns right here, right? Look at just the way the price moved. So bullish conditions, bullish price action will be a U, bearish will be like that. I know it sounds stupid, but it is what it is, okay? So you see something like this, U. I see that, it's bullish, right? Eventually it's going to break down. If I see price going like this, you want to know what the next thing is? It'll go like that. That was, okay, L, big L. But it'll go like that. Why? Because moves will become more extreme to the direction of the convexity. Okay, so it's convex in this direction, it'll move down more aggressively, vice versa in the upside, right? So you have convexly facing this way, price will move up aggressively in that way on the breakout. A little bit of a pet theory that I have, but just watch charts, you'll notice, right? The reversal structures are going to be U-shaped, V-shaped, and that's the case for both upside and downside. So KHC really loving this. Main target would be any of these distribution highs towards the trend or this downtrend. So for example, $25 here, nice TP. And then up here at 25.5 also really lines up with this level. So I can just really drag this over. So you'll see a really nice market structure over here, clear signs of reversal. If you go on higher time frames as well, we've got bull divs forming all the way going back to November 25th. So as you can see, that's a higher low on a much lower price over here with huge volume on this gap down. Overall looking very, very good. And if earnings turn out to be good, I usually don't play earnings, so I would take this as an earnings run-up trade and then maybe have a couple of runners, like 1 to 5 contract runners, depending on my account size and you know how much profit I've made from the trade and everything. But yeah, generally you don't want to like do earnings trades, in my opinion. It's just too volatile. If you don't have an insider knowledge of the company, then you're not going to really have that big of an edge. TA is a lot less useful because it's a volatility event. So, you know, a lot of concepts and rules and stuff like that that you might have just get broken down. So you can't really trade earnings reliably unless you have an insider edge or you have some very, very good thesis at the right place, right time. Conditions are just really good. So I just generally try to avoid them. But With something like this, I can see bullish conditions are very clear. We had this breakout, we have the bull flag, most of the work is done for us. I like the trade as an earnings run up and then carrying some runners after that. Finally, next trade will be US oil. So as conditions with Iran get worse, this trade is going to be even better. I've been bullish on US oil for a minute. I tried to long it back over, where did I try to long it? Over here. Yeah, no. It was back in December. Yes, I tried to go long over here at 70. I had $72 calls, took most profit over here, but still had a third of the position. Ended up holding this to literally zero, so that sucked. But this turned out to be the low, and then finally we have this massive breakout over here. Oil is just going to be really good. Been very bullish on oil and commodities this year. That's not going to be changing. We've got a very, very nice pennant forming over here. So this triangle formation. Again, with these U's, so we have one U here, one U here, one U here. Pattern traders will say it's an inverse head and shoulders, or a pennant, whatever. Doesn't really matter though. We have two trend lines. We know what to do, right? We just trade the breakout and the retest. So USO, if it breaks out over here, we're going to be targeting these highs at 80, as well as this swing high over here at 79.45 with a final TP of 83.3. If something were to happen with Iran or tensions continue escalating, which they probably will going into this week, as the negotiations with Iran stalled on Friday and were not productive at all. So as these conditions continue to worsen and happen, the bull thesis and this trade will just benefit more and more. So if you're catching wind of some Iran stuff and you were wanting to make a bet on that, or trade on that rather, this is a good way to get some participation in there. US oil chart looks incredibly good, resting on the 9-day EMA right now, has been holding that steadily since the breakout. As you can see here, never touched the 21. So this is a really, really strong asset with really nice volume distribution patterns over here, by the way. So you can see here, huge volume on this entire run up over here. And I know it's a bit of a stretch to say this is a distribution, but it kind of is, just given where it's bouncing between. It's a distribution within these trend lines. However, the volatility being there means that it's running up so wide. So when oil is like that, it's really nice to trade. It trades based off of headlines and stuff like that, which a lot of times you as a trader, you feel out of control. You feel, like your decisions have no weight on the market, because they don't. So when you can get trades that align with the chaos, it feels really good. You feel a lot more in control. You feel like, I don't have to stress about this event. Actually, shit hitting the fan is good for me, and it gives you a nice level of reassurance and a nice level of volatility if you pick the right assets. Volatility is a good thing if you're, in the right stuff, right? So yeah, US oil, really nice. I'm about to give some more oil charts for that matter. So Kinder Morgan, I've been on this. This is one of my sweethearts. I love this chart. This is probably the cleanest chart on the stock market, unironically. Let me show you this beauty. Oh my God. So, okay, where do I begin? We have massive sell-off in 2015 going into 2016. Not exactly sure why that happened. It's whatever. Anyways, none of this really matters that much. What matters is the correction that's happened since then. So we've had this double bottom over here, right? Lows got swept. Big old distribution with another real double bottom forming over here. So let me just draw it. And then move back into this just distribution over here. And then since that time, Oh my god, I have to turn this fuck ass magnet off. Whatever. We've had another distribution, okay, with what appeared to be an uptrend forming, and finally a breakout, a huge multi-week breakout that lasted over a year. So from March 2024 all the way up until the highs were in January 2025, but it consolidated. So really this run up has been still intact and valid. And now it's going for the second breakout. So in terms of the long swing trade, I'm already in this, full disclosure. I've in fact posted about this on my 2026 watch list video. Give that a look. It's in the channel. Now, I can see this pulling off another massive rally like this, which is why I'm in it. Again, I am long oil, natural gas, energy, commodities in general. I think this will get another massive rally going into new all-time highs and just continue higher. It's currently at all-time high, for that matter. But yeah, KMI looks really fucking nice. Really good volume distribution patterns over here. Higher highs, higher lows, forming distributions as it's continuing. So you want those, it's chutes and ladders, right? You have the ladders and then you have your chutes. You alternate between the two. As long as that combo with the uptrend and downtrend aren't held intact, then your bias should be as well. So this, you can see higher highs, higher lows, higher highs, higher lows. Looks really fucking solid. I can see KMI hitting 31 this week and going even higher, to be quite honest. Really, really nice chart. In my opinion, the best way to swing this is just to buy stock. Buy the stock or buy some leaps, at the money or slightly out the money leaps, going out like a year at minimum. Another thing about KMI is it's forming that classic pattern of hugging the EMAs and having that upward consolidation. So this just screams that it wants to go parabolic, if it does, and if I were to enter this, I would absolutely wait for a retest of either the 9 EMA over here on the daily, because this is where you're starting to see this pattern, or a pullback into some sort of major liquidity area in this distribution. So you can either use, for example, that's not good. You can either use your, where is it? Fixed range, that's what I was looking for. By the way, it's like 5 a.m., so you gotta cut me some slack if I'm stuttering and stuff like that. Anyways, either a move back into the value area high at 30.37, a move back into the POC at 29.75. Value area low, I would be scared at that point because then we're sweeping these lows over here, and then we could see a move down before we go higher. But yeah, so use one of these levels for the distribution to see where you should enter. As you can see over here, this POC, let's just mark it out. Whoops. It lines up very, very well with the market structure that's created, right? So it's the high over here, resistance roughly over here, a lot of chopping consolidation, low over here, resistance over here, support over here, right? So if you can get a move down into this level, that would be ideal. Below this, then I would start to get worried that we go back down here for a retest potentially before going higher. Again, this is a long-term swing trade for me personally. For you, you need to identify the market conditions and just accept what the chart is providing you. So that's why use the levels that you're marking out on this recent distribution for an entry. Next chart is UNH. UNH looks really nice. So why does it look nice? I'll show you right here. Yeah, I do want it like that. I forget UNH is a dividend chart. So UNH, huge gap down after earnings, has been moving down since then, However, has formed some really nice bull dips over here. Finally came back lower after the Thursday drop, consolidated really nicely, which is what you kind of want to see for a long sustained reversal, right? So when you have sustained reversals, you want to see some sort of consolidation with a higher high and higher low formed, and then climbing above these EMAs. So for example, this, right? Massive move lower, finally swept these lows over here, just like it did over here, for example, went lower, higher high, higher low, and then finally took out this critical resistance area set by this low and formed a higher low, turning what was the ceiling into the floor, and then continued higher along the EMAs. So UNH, I'm going to be looking for a very similar thing. Above the EMAs right now, I could target 285 over here for just a push towards the downtrend. And then a final move for a sustained swing trade all the way up to 324.76, 325, let's just say, to clean it up. Really, you could even be targeting the gap over here, but personally speaking, I'm anticipating a drop within the next month or two. So, and UNH is, it's a healthcare stock, it's a dividend stock. It'll move a little slower. So I'm not sure if I want to be in this for like a month or two, to be quite honest. So therefore, I'm not targeting the full gap fill. But a move to 325, I can see that, especially once it breaks out of this uptrend and then can really find some acceptance in these EMAs on the other time frames, like the 4 hour and the 1 hour and such. So yeah, that is my watch list for this week, guys. I stand corrected. There was one more. And this is another bit of a longer term swing trade. I prefer just to hold this because of how volatile it is. But this is RR. That's a robotics company. Now, I think eventually we'll get lower prices because this level just does not seem that it can hold for much longer, to be honest. We had 3 taps after breaking out from it. Not very good. Pretty bearish, in fact. So eventually a move down towards 2 all the way to $1.5 would be awesome to load up on a stock. But for the time being, after this move down here, I can see RR making one more push towards 3.8 over here, and then potentially even this rough distribution area. So if you go and check here, you can see resistance, support, fell through, resistance, broke out, support here, support here, support here, broke back down, resistance the whole time here, swing failure pattern, broke down, swept the lows. It's very similar to the other charts, right? We had a swing failure pattern, a breakdown, sweep of the lows. That's going to give ammo to get a move back higher. I'm not targeting a complete breakout of the structure, again, like with the other charts. I'm just looking for a move back into the resistance level because, eventually after, let's see, a 46% move down, mean reversion is at some point going to happen, right? So this is very similar to the Oclo, to the SoFi play, to Lemonade, right? We had huge drops in these secular stocks, right? These individual decent smallish market cap names. We have clear market structure being respected. We have a swing failure pattern, breakdown into a range, a sweep of lows with some really low volume run up on Friday, which meant shorts were covering. This wasn't really like people trying to buy the dip. This was just shorts being forced to cover and exit the trade against their will as price, basically recovered briefly on that morning gap up. So very exact same trade, aiming for a move up to 4.2 to 4.67-ish, let's just say. But yeah, I'm not going for a full breakout or even anticipating that this resolves to much higher levels. I do think actually based off this it goes lower, but we're looking for that mean reversion. So yeah, That's it for the weekly watch list. Another video will be dropping on the trades that we took this week. Absolute bangers coming out. But yeah, thank you all very much for watching. If you guys have any video requests or ideas, feel free to let me know in the comments. I'm going to be looking for some much more niche stuff, some much more focused like research. That's the part I enjoy the most. The trading, making videos on trading and charts and stuff like that, it's obviously useful and very informative, and that's what people want the most, but it's also kind of difficult to be actionable on. So research and stuff like that, going into like sectors, themes, and all that is, in my opinion, a lot more valuable to people and audience, just because you know I can give you like a trade, but you're not gonna make like generational money off that, to be quite honest, right? Like off no single trade. But if I told you what the next Nvidia would be, you're gonna make generational money off that, you know. If I got you a 10x off of an SPX trade based off of my bias and my TA that I'm giving you and stuff, that's great. But realistically, you're not going to be putting any more than like $1,000 in SPX, Whereas like if you manage to accumulate $1,000 over a long period of time into a new industry or a new asset that was put on your radar because I believe or someone else believes that it has huge potential going into the future, that's actually going to change your life massively. So for example, AXTI right now, still nowhere near the valuation that I think it should be, but going into like, let's just look at where AXTI moved from when I dropped my 2026 outlook video. From the market close till here, it's 68%. From where I entered at 9.4, 9.38 technically, it's up 162%. And this is just beginning to break out. And I posted it on the channel for free for everyone to see because I'm confident in this long term, So I give something like this, you have all the time in the world to enter. And this, as I said, has potential to rally up over 1,000% going into the future. So, stuff like this is going to be much more useful, in my opinion, going into the future. But yeah, leave a like, comment, subscribe, share the video. Thank you very much. Peace out.